Hello and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for our next presentation from Glasshouse Brands. Please note you can submit questions for the presenters in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome our moderator, Mike Regan. He's the Director of Research at Excelsior Equities, as well as Graham Farrar, co-founder, president, and board director, Kyle Kazan, co-founder, chairman, and chief executive officer, and Mark Vendetti, chief financial officer of Glasshouse Brands, which trades on the OTCQX Best Market under the symbol GLASF and on the CBOE under the symbol GLAS.A.U. Welcome, Mike, Graham, Kyle, and Mark.
Thanks a lot.
Thank you.
Thanks for having us.
I guess I'll just kick it off as we just know. I'm Mike Regan, Director of Research at Excelsior Equities, which is a member of FINRA and SIPC serving institutional investors. We're talking with the senior management team of Glasshouse, co-founder, chairman, and CEO Kyle Kazan, co-founder, president Graham Farrar, and CFO Mark Vendetti. So first off, I'd like to congratulate you all and the whole Glasshouse team for being the top-ranked cannabis company in the 2024 OTCQX Best 50 ranking of top-performing companies that trades on the OTCQX. Next, I'll just provide a quick disclosure from Excelsior that today's discussion is for informational purposes only, and any information discussed is not an offer or solicitation to buy or sell any securities. Excelsior Equities covers Glasshouse with a buy at a $10 target price, but this alone is insufficient to make an investment decision. I do not personally own shares in Glasshouse. Excelsior Equities does not make a market in the stock. Excelsior has not received any compensation, investment banking or otherwise, from the company in the last 12 months and does not expect to receive any compensation in the next 3 months. We encourage institutional investors to read our full research reports and the risk sections therein. Okay, so let's get to the fun stuff of jumping into Glasshouse. So just for reference, we at Excelsior view Glasshouse as a low-cost, scaled producer of premium sun-grown cannabis in California and the U.S. overall, with a unique skill set of efficiently growing hundreds of thousands of pounds of quality cannabis annually at consistently low costs. So my first question for the whole team, can you tell us more about your unique Southern California farm, as the 6 greenhouses, and focus sort of the discussion on how you had part of that planted in 2022 and the second greenhouse that you're just starting to harvest right now, just to help everyone get up to speed on what's going on with Glasshouse.
So thanks, Mike. I'll start at 30,000 feet, then I'll hand it over to Graham to get into the kind of the weeds, if you will. And number one, really appreciate you hosting this and to be part of the OTC Top 50. We're completely honored. Wouldn't have been able to do it without all the great team members of Glasshouse and, of course, all the investors that were kind enough to buy our stock and partner up with us. So in October of 2018, Graham discovered this greenhouse, and we all went over and talked with the then owner of it. And we realized when we saw this that this was something special. And again, I'll ask Graham to kind of share what is really special. But we knew that whoever got this greenhouse was going to be a leader in this industry. And we didn't want to compete against that. We wanted to be that leader. So Graham, why don't you share what's amazing about this greenhouse and what's special?
Sure. Yeah, and also to echo Kyle's comments, thanks to the OTC for having us. Thanks, Mike, for hosting. For anybody who hasn't checked out Mike's research on Glasshouse through Excelsior, it's definitely worth looking at. It's certainly some of the best in the business, and I think he was one of the early guys to kind of get us and what our model is all about. So for context,
do you know that Mike didn't own any shares of Glasshouse? Like what?
I was slightly, I was a little bit sad when I heard that, but I'll get over it.
Okay.
I have to stay purely independent, and I'm not talking my own book. So I legitimately think it's a very interesting story that's undervalued, and I can't benefit from it.
Yeah. So for quick context on GLASF, we started about 8 years ago. Our foundation has always been based on the plant and the cultivation of it. We've now got 3 farms. We started with a 150,000 square foot farm many years ago, and that's important because one of the ways that we got big was actually by starting small, which is a different approach than many others have taken, particularly as they get to scale. So our 150,000 square foot greenhouse, then we got a 350,000 square foot greenhouse. Then we brought in retail. We currently have 10 retail stores, the 3 farms, and we have 3 primary brands: Allswell, Glasshouse, and Plus, which is an edibles brand. Again, for context, Allswell and Glasshouse together, per the most recent data from Headsets, actually the most consumed cannabis by units in California, which is the world's largest cannabis market. So it gives you a sense on where we play in the big picture. The SoCal farm is really, it's a unicorn, as Kyle mentioned. We've been hunting this since 2018, so going on 6 years now, because if you think of the Venn diagram of where you get the right climate, the right appellation, both in terms of innovation as well as the discerning customer and the competition that we have in California, labor, water, the ability to grow cannabis, and an amazing facility, the only place that really connects anywhere on the planet is at our SoCal farm down in Camarillo, which is just a few miles away from the coast in Malibu. So it's a very special farm. Many people start with the size. It's 120 acres or 5.5 million square feet, which makes it one of the largest greenhouses anywhere in the United States for any crop, not just cannabis. But more important than that is really the efficiency and the quality that it's built around. It was originally developed for tomatoes, which are a 5% margin business. We're not looking for 5% margins. We're looking for 55% margins. But the thinking and the technology and the design that goes into doing that for tomatoes is really very similar for cannabis. So we currently have 3 of the 6 greenhouses turned on. We've got 1 greenhouse for nursery, 2 greenhouses for flower, and then excitingly, that means that 60% of the flower capacity is still to go. So with everything we're doing, we're still only 40% occupied. And really excited to turn on the rest. So we've got a bunch of tools, from roof washing robots to ebb and flood floors to the amazing team to the world's best dry rooms. And what that allows us to do is accomplish quality, consistency, and cost together. So one of our mantras since the beginning has been, first you got to do it great, then you got to do it great every time, and then you got to do it great every time efficiently. And our goal is to be the most consumed cannabis brands on the planet. The Casamigos of cannabis maybe is a way to think of it. And what that means is that we've got to have the highest quality for the best cost, and that is Glasshouse's unique special sauce.
Yeah, I mean, that's basically the story in a nutshell. I mean, you've given basically guidance for, I think, 215 to 220 million revenue and EBITDA of at least 50 million this year, which is more than 100% growth in EBITDA year over year. Can you help us sort of understand some of these economics in terms of the the price you're getting per pound, the cost per pound, and sort of how you expanding this additional greenhouse sort of drives that growth this year and what it could do longer term.
Mark, you want to?
Yeah.
So as it relates to 2024, the simplest way to think about the growth is year over year, the growth is coming from the new greenhouse, right? And we'll probably touch on this, but the retail and CPG environment is extremely difficult. So we're thinking that part of the business will be essentially flat in 2024 versus 2023. So all the growth really is being driven by the new production out of the new greenhouse and new revenue from that. And the simple math is the 60 million. We would expect at least mid 50% gross margins, and it's an extremely efficient business, and operating overhead, sales, marketing, some of the other fees, insurance are generally around 12%. So adjusted EBITDA or EBITDA number should be in the low 40%. So if you take a low 40% number with 60 million incremental revenue and add it to what we did in 2023, that gets you to the roughly 50 million in 2024. So it's a pretty simple story. The beauty of being in California, it makes it very easy for someone to look at our business and understand what's going on.
Yeah, one of the great things too, Mike, is with their recent expansion, we call it Greenhouse 6 is the first one that we've been operating for the last 2 years. And we just recently in March both finished planting the new greenhouse, Greenhouse 5, as well as had our first harvest. And one of the great things, those greenhouses are about 100 feet apart from each other. So the first time we went into this, there was a whole lot of guessing, educated guessing, but guessing nonetheless. As we come into the second one, there's a lot more copy and pasting going on because we've got a couple of years of actual on a very similar greenhouse. We made some improvements, so we're expecting the new greenhouse to be the best one yet. But we also have a great foundation of experience now that we didn't have when we did the last one. So adding that new one, and particularly in light and the contraction that we've seen in supply, is something that we're really excited about, and we're kind of excited to keep taking the learnings from the Greenhouse 6 and applying it to Greenhouse 5, and hopefully making it our best ever.
Exactly. Basically, as I remember, the first Greenhouse 5, the cost the second half of last year, they were sort of running about $120 a pound, and you're basically selling the cannabis for, call it this year, what's guided to be $315 to $320 a pound. So, but this year, as you ramp up a cost, like this is not a light switch that you just flip. You've got 1 million square feet of plants that you're ramping up, right? So this year the costs are about $135 a pound. But is there any reason you couldn't get back, over time as you ramp things up, get back to sort of that 120 a pound? And I guess you tell us longer term, what could that cost get down to?
So Graham, you want to talk about how we get below $100 a pound?
Yeah, and also I want one thing, Mike, too, to make sure that people realize is that there's an expected seasonality in our business. We're powered by the sun to a large degree. So Q1, Q2, you would expect to be our highest COG seasons because we yield less because of less sun. So going up in Q1 from Q4 is essentially always going to happen just because of the seasonality. So that's not really a step backwards. That's just expected for that season. Our long-term target is $99 a pound. So we had $120 a pound in the back half of 23. We'd like to get to a full year $99 a pound. There's a handful of things that'll go into that. Partially is experience. We work and measure seconds, and we're looking for ways that we can save seconds in all of our processes. Scale will also help because you're able to amortize a lot of the fixed overhead across more pounds. I mean, you think of something as simple as property tax or insurance. The more pounds we grow, the bigger we make that denominator. Doesn't mean you pay more in property tax, but your property tax component of every pound you grow gets smaller. The other will be improvements in technology and efficiency. So things that we're doing, fun stuff like photo optical sorters, more efficient processes, more efficient ways to fit more pounds into dry rooms. All those things will come to bear, and $99 is where we'd like to get to. And we think we'll be able to realize that far before actually filling up the property all the way. As we get bigger, we expect to continue to see those numbers down, and I expect that people will see our glide path, so to speak, from where we started to where we're heading in all the quarters that we put out there.
And Mike, to follow up with Graham, think about we just turned on a new farm that's going to add 250,000 pounds at least per year. So now you have to have newer people that we just hired to train them to trim and to harvest and everything else. And that takes a minute to gain that experience. So there's always going to be a little bit of a spike, and then it comes down. And as Graham said, with technology, we will even find some better improvements.
Yeah, exactly. The longer term is, as you get better, constant improvement, scaling into things, training people, everything, the costs naturally ramp down. Because again, it's not easy to just turn on 1 million square feet of plants overnight. You don't just, that just doesn't happen. That's all the work that goes you guys, refining the processes.
Yeah, and one of the things that should be pointed out, I don't know anybody who's growing at our cost now. So we've broken the 4-minute mile in a lot of ways, and we're trying to get to the 3-minute mile. So right now we're way ahead of our competition. So I just want to make sure, for context, if people don't understand the business and the industry, we're never satisfied, but we're already the lowest cost producer.
Yeah, and sometimes we describe it, we're in a race with ourselves now, but that doesn't mean we don't start stop running as fast as we can. Also, quick note, Mike, the greenhouse itself is about 1 million square feet, but the canopy is closer to about 700,000 square feet. So that's what we're actually turning on from a production point of view in Greenhouse 5. But yeah, I mean, you can look back. It's hard to find reference points, but there are a couple of other public companies in California. So if you want to do the research, you can look back on previous quarters, and you'll find quarters where we had high 50 to 60% margins, and other operators in the same environment and market that we're in were reporting negative margins. So I think the work that we're doing. Many of the operators in other states are probably in the $700 to $1,000 a pound COGS, and we're in the $120 a pound COGS. So we're already way ahead of the rest of the pack from that point of view.
Exactly. Well, and on that, I mean, one thing that is sort of supporting the pricing and allowing this expansion in California is, at least by my math, the licensed cannabis cultivation in California alone is down 24% in the last 18 months, which clearly there's a lot of people who are struggling to make money at these lower prices and deciding I'm going to do something else. And the capacity you're adding back is only 2 percentage points of that back. So it's still down 22 net for you. Basically, the low-cost producers expanding is other people are deciding I'm going to convert my greenhouse back to tomatoes or strawberries. I can't compete with these lower costs. So I guess can you help us understand sort of the strategy and economics and costs for converting more of the greenhouses on the farm? As you know, if you've got 2 rooms converted now, and there's a few more rooms that you could also convert as demand allows. So can you help us just understand sort of the economics per room? Are they similar, and your thought process and how that happens?
Yeah, let me for those that don't know the cannabis business that are checking us out. Number one, right now we are in the 4th largest economy in the world. We can only sell in this state. So what you grow, you have to sell in that state that you grow it. So we have no interstate commerce. And California is the home of cannabis. It's recognized throughout the world as the home. The weather, everything is great for cultivating this product. Unfortunately, just like Iowa is great for corn, imagine what would happen if Iowa corn farmers could only sell in that state. It would be a crushing. And that is what's happened here, unfortunately. When interstate commerce happens, which eventually will, I don't know the time, California, you're going to see all these farms turn on again, and California will be the home of cultivation of cannabis. Oregon and Washington will also, but California for sure. So right now during this crushing, imagine how strong to win right now. We're the most efficient cultivator in the state that you want to cultivate in. So we really are looking forward to the day that the walls come down. But in the meantime, as you're saying, with all that has gone away, all the farms that had to turn off, yes, we can just go one after the next. But as Graham was talking about turning it on, there's a lot to it. And so we're going to be looking at what's the cost to turn on Greenhouse 2, what's the cost to turn on Greenhouse 3 and 4, and what are all the processes. But we're looking at that right now. And as Graham just explained, every time we turn on a new greenhouse, our overall cost to production will be going down. So it's just one of those things where, quoting John Wooden, we're being quick, but we're not hurrying.
Yeah, I think Mike, it's also, thinking of some of the mechanics, right? Historically, cannabis had a large risk premium in it, right? People expected to get paid well because there was a risk they could end up in handcuffs, right? And one of the big upsides of legalizing was the idea that you get rid of that risk premium because people should not fear for going to prison for a plant, right? But that one of the other effects of that is you normalize cannabis. That's the goal, right? But normalization means normalization back to normal business operating principles, where you need to be an efficient operator, a consistent operator. You need to produce a product that people like and are willing to pay you more than it costs you to make it, right? And that, I think, is kind of the approach that we've actually had from day one COGS have always been a primary focus, is how do we grow the best cannabis for the lowest possible cost so we can give the consumer the most value and make the most margin. And then once we can do that, how do we scale that up? Because what the world doesn't need is more crappy cannabis. It doesn't need more overly too expensive cannabis. What it does need is high quality for low cost, and that's really when you want to turn the scale dial. So that's what we've been focused on as that risk premium has come out, as well as because of some absurd regulatory requirements in many areas. Mendocino, for example, the largest farm you can have is 10,000 square feet. That's a quarter of an acre, right? And with a ton of overhead and a ton of taxes and a ton of regulatory burden, that just doesn't work. So we've tried to pick places where we don't have those constraints and we can bring leverage that you see in other agriculture, efficiencies, automation, good agronomy practices to bear with cannabis, our favorite plant, and then deliver something in a scale and a cost and a quality and consistency that nobody else can.
I know, and also you mentioned if laws change longer term, then your market expands from just California to the whole country. And you said corn likes to grow in Iowa, oranges like to grow in Florida, cannabis likes to grow in California. Presumably, then that would soak up a lot of demand. And I think you mentioned also that the costs for some of the other cultivations across the country, again, where cannabis doesn't like to grow, is significantly higher than where it does with the sun and the right weather. So I guess presumably that'd be, you'd be able to have a low-cost producer in a larger market with potentially higher pricing as well.
Yeah, I think there's a little bit of a false feeling that cannabis is an easy plant to grow, right? It grows like a weed is the joke. And it does grow, but growing is very different than growing quality. It's very different than growing quality consistently, and it's different than doing it quality consistently at a low cost. I think the best parallel for cannabis is actually a strawberry, right? So if you think about a cannabis bud, it's like a fruit with no skin, right? If you imagine trying to grow oranges in Florida, if they didn't have the tough skin on them, it wouldn't work very well. Cannabis, like a strawberry, very thin skin, seeds on the outside. It's quite similar, where it actually is a very sensitive plant to grow. And if you look at that and use that as a parallel, one of the things you'll find is of the strawberries grown in the United States, 95% of them come from California. And it's not because people love strawberries from California, they love strawberries. It's because California is the right place to grow strawberries. If you look around where our farm is, you'll actually see Driscoll's and Ryder and some of the biggest strawberry producers anywhere in the country as our neighbors, because this is the right climate to grow that particular plant. It's not California centric, right? We're not claiming that we're the home of pizza and New York deep dish. We're just saying when you're talking cannabis, you're talking California, and the consumer is even willing to pay a premium for it. So we can grow better, lower cost, and charge a higher premium because consumers have a preference for that appellation, which is a great combination.
So in terms of something that maybe not exciting for everyone to talk about, but for those who aren't aware, the cannabis sector is the only sector, I think, in the world really, that pays this very strange tax called 280E taxes, which basically applies the federal tax rate of 21% effectively to gross profit. And this is all because you cannot deduct interest or payroll or advertise or any other normal expense that every other business can deduct, because marijuana is Schedule 1 on the Controlled Substances Act, which says it has no medical use. Recently, the FDA and the Department of Health and Human Services just completed a scientific review recommending the DEA shift marijuana to Schedule 3, which would remove those onerous 280E taxes and give you the same tax treatment that every other business enjoys. So, Mark, could you help us understand if the DEA says Schedule 3 and removes 280E taxes, what that would mean for GLASHouse's strategy and financials and what have you?
So the simplest way to think about this is the tax burden we experience under 280E would drop by about $10 million at our current size. So the simple way to think about it would be we would pick up $10 million of cash each year going forward without having to do anything different from an operating perspective. So for perspective, we have a credit facility of $50 million, and that $10 million would in essence pay off 20% of that annually if 280E goes into effect. The other thing is that we think would facilitate uplisting to, a major exchange or opening more toward capital markets, making it easier. So in theory, or we believe, our cost of capital would drop significantly, and we could use the change to not only save on the tax front, to potentially do things that would make our balance sheet better at a lower cost.
It says a lot about the cannabis industry, Mike, and just where we are and how early we are, that the idea that we get treated like every other business is what people are the most excited about, right? I think if you're thinking of investors out there, like that's the stage that you're at, where if we just got treated like every other business, it would be a massive upside lift. So it kind of illustrates the headwinds that cannabis deals with out there. And we've heard now from both the NYSE and the NASDAQ that the hurdle for them is Schedule 3. So rescheduling potentially opens the door for uplisting to the U.S. exchanges, which would be another, again, just like a regular other U.S. business to be able to list on the U.S. exchange, but again, massive upside potential from that as well.
But now, one point to clarify on even if the DEA does say Schedule 3, that doesn't make marijuana illegal, and people would still be in jail, for past offenses for it. Luckily, it seems like things are starting to move along incrementally, in government as more states legalize and the federal government is at least starting with considering moving. I know, Kyle, you've been sort of an activist and advocate for, to correct some of those injustices as GLASH-House as well. Can you help us understand some of the things you've been doing and things you would hope to keep doing or do more of if we get Schedule 3 or not going forward in that realm?
Yeah, thank you for asking me that question. You just covered 280E, which is extreme taxation with literally no federal representation. When I say that, everything that has happened in cannabis to the positive has come from the states, not from the federal government that overcharges us on taxes. To boot, what you just brought up is there's approximately 3,000 federal prisoners for cannabis, non-violent cannabis. So you've just been asking us for the last 27 minutes about how much money we're going to make here. How do we cut our expenses so we can increase margins like every other business does, which means cannabis is now a legal business in the United States. And there's people that are serving, and I'm going to quote Mike Tyson on this, people are serving murderers' time for cannabis. And so we've been asking Joe Biden to take out his pen. And what he asked President Putin to do, to release Brittany Griner, we're now asking him to do, and release 3,000 prisoners. Don't even wait for the Schedule 3. Don't wait to deschedule. Don't wait to legalize. These people, and we communicate with them. I quite often, because this is one of the things I take the lead on in this company, and I just, it's hard to understand. While we're living our great lives and trying to boost investor value and provide great cannabis to people, there's people that are sitting in cages and rotting away. So I believe the president is going to do the right thing. I believe he's going to live up to his campaign promises. April is Second Chance Month. I'm honored to sit on the board of Mission Green with Weldon Angelos, who served 13 years of a 55-year sentence. And he's talking with a pardon attorney. I just wrote a letter to the president requesting that he pardons people and a lot of celebrities. Weldon's brought a lot of us together. And so we are hopeful that some clemencies are coming. It's an election year. There's no reason not to.
That's great. I guess looking at the time, we're getting out to be just about up, and that's pretty much all my questions. I don't know if you had anything you wanted to close with, or any key conclusions or takeaways you wanted to share with anybody.
I would tell anybody that's considering investing in us, this is a great time to look at the cannabis industry. We obviously think we're doing something special in that industry, and by our results last year on the OTC, so did the market. But at some point, the quant traders and everyone else is coming in. This is a great time if you're thinking about investing in an industry in the very early stages. Think .com. This is a great time, and we hope you'll consider Glasshouse.
Great. Well, thanks a lot, everyone, for your time, and thanks everyone listening as well.
Thank you.